Welcome back to BitcoinDorks, your daily source for all things cryptocurrency. Today, we have some major news shaking up the market. Bitcoin has seen another significant outflow from Coinbase, this time totaling a staggering $1.2 billion. Let's dive into the details and explore what this means for the crypto landscape. Bitcoin, the king of cryptocurrencies, has been making headlines once again. This time, it's not about its price hitting new highs, but rather about a massive outflow of Bitcoin from Coinbase, one of the largest cryptocurrency exchanges in the world. According to reports, Coinbase has witnessed a substantial withdrawal of Bitcoin amounting to $1.2 billion. This massive outflow of funds has sparked speculation and debate within the crypto community about its potential implications for the market. While it's difficult to pinpoint the exact reasons behind such a large withdrawal, there are several theories circulating within the community. One possible explanation is that large institutional investors or whales may be moving their Bitcoin off exchanges and into cold storage or secure wallets for long-term holding. This could indicate a vote of confidence in Bitcoin's future prospects and a desire to hold onto the asset amidst market volatility. Some analysts believe that such large withdrawals could lead to increased scarcity of Bitcoin on exchanges, potentially driving up its price due to supply-demand dynamics. This scenario hinges on the basic economic principle of supply and demand. With a substantial amount of Bitcoin being withdrawn from Coinbase, there would be a reduction in the available supply of Bitcoin for trading on the exchange. As a result, the supply of Bitcoin on exchanges would decrease, while demand remains constant or even increases, leading to a potential imbalance between supply and demand. In such a scenario, basic economic theory suggests that prices would rise to reach a new equilibrium, reflecting the scarcity of Bitcoin available for purchase on exchanges. The significant outflow of Bitcoin from Coinbase indicates a shift in investor behavior, with a portion of Bitcoin being moved off exchanges and into long-term storage. This reduction in available supply on exchanges could create a supply shortage, causing prices to rise as demand remains constant or increases. The timing of this outflow coincides with a period of heightened institutional interest in Bitcoin. Institutional investors, who often prefer to hold large quantities of Bitcoin in secure custody solutions, may be withdrawing their holdings from exchanges in anticipation of long-term investment strategies. This accumulation of Bitcoin by institutional players further exacerbates the supply shortage, contributing to upward price pressure. The recent trend of corporate treasuries and publicly traded companies allocating a portion of their reserves to Bitcoin adds to the demand side of the equation. With more institutions and corporations entering the market as buyers, the competition for Bitcoin intensifies, driving prices higher. While it's true that large withdrawals from exchanges reduce the available supply of Bitcoin for trading, they could also signal a lack of confidence in the market or a desire to liquidate holdings. In such cases, investors may be withdrawing Bitcoin from exchanges with the intention of selling it, potentially leading to selling pressure and downward price movements. Indeed, the impact of the Coinbase outflow on Bitcoin's price remains uncertain, and the market's reaction will depend on a variety of factors. Investor sentiment, for example, plays a crucial role in determining market dynamics. If investors interpret the outflow as a positive sign of increased institutional adoption and long-term confidence in Bitcoin, it could fuel further bullish sentiment and drive prices higher. On the other hand, if investors perceive the outflow as a signal of potential market instability or a lack of confidence in the short-term outlook, it could lead to heightened uncertainty and selling pressure, resulting in price corrections or consolidation. Market liquidity is another key factor to consider. If the outflow results in a significant reduction in Bitcoin's availability on exchanges, it could lead to decreased liquidity and increased volatility. Conversely, if market participants have sufficient liquidity to absorb the outflow without causing disruptions, the impact on Bitcoin's price may be more muted. External developments, such as regulatory announcements or macroeconomic events, could also significantly influence the market's reaction to the Coinbase outflow. Positive regulatory developments, such as clear guidelines or favorable legislation regarding cryptocurrencies, have the potential to bolster investor confidence and mitigate any negative impact stemming from the outflow. For instance, if regulatory authorities provide clarity on the legal status of Bitcoin and other digital assets, it could alleviate concerns among market participants and reinforce the legitimacy of cryptocurrency markets. If regulatory authorities introduce stringent regulations or unfavorable policies affecting the cryptocurrency industry, it could trigger panic selling and further downward pressure on Bitcoin's price. Likewise, negative macroeconomic events, such as geopolitical tensions or economic recessions, may dampen investor sentiment and contribute to market volatility. Therefore, it's essential for investors to monitor external developments closely and assess their potential impact on the cryptocurrency market. particularly in light of significant outflows like those observed on Coinbase. By staying informed and vigilant, investors can navigate the evolving landscape of the cryptocurrency market and make informed decisions based on a comprehensive understanding of the factors at play. The crypto community will be closely monitoring the situation for further insights into the evolving dynamics of the cryptocurrency market. As investors continue to assess the implications of institutional activity and market trends, the coming days and weeks are likely to provide valuable insights into Bitcoin's resilience and long-term trajectory. In conclusion, the recent Coinbase outflow of $1.2 billion has captured the attention of the crypto community and raised questions about its potential impact on the market. Whether it signals bullish sentiment or impending volatility remains to be seen. As always, investors should conduct their research, stay informed and make decisions based on their individual risk tolerance and investment goals. That's all for today's update. Don't forget to like, subscribe, and hit the notification bell for more daily insights from BitcoinDorks. Until next time, happy investing.